Boom! What's going on, guys? Welcome into your energy news beat here on this gorgeous Wednesday, January 27th, 2021. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. How you doing today, my man?
Man, it is a beautiful day in the neighborhood, and the world's going nutty.
Yeah, you can check out all what we have on the show and a bag of chips to my left here, but Stu is right. Today is a nutty show, but before we dive into all of the equities markets, guys, just go ahead and subscribe to this YouTube channel. Smash that like button like those 16-year-old YouTubers say. We really appreciate all the support. Also, go to the world's greatest website, EnergyNewsBeat.com. Go click the subscribe button. It's like a little bell in the bottom right-hand corner of your screen. It's literally a stream of consciousness. We talk about, you ever need an IV of coffee? I feel like sometimes I need an IV of coffee every morning. Just wake up. If you need an IV of news like me, go hit our subscribe to our one push notifications. It's the best way to never miss an energy story. We talk about the equity markets today. They got absolutely slashed. And there's sort of two sides of the story here. One, we have a handful of stocks that were over 100%. Gamestop, BlackBerry, Nokia, and the most emphasis one, GameStop, and we'll cover why. But broad overall indices down heavy, Stu. 2.56 percentage points for the SPY. Nasdaq down 2.65 percentage points. U.S. Dow Jones down 2.5 percentage points. Broader markets down by a couple reasons. One, Boeing comes out and reports earnings. They had not great 2020 net loss of record $11.9 billion amid the 737 MAX grounding and the coronavirus pandemic. AMD tumbled more than 70%. They're a chip maker after they posted revenues and earnings that didn't quite beat Wall Street's already high expectations. Here's the other side of the story, though. There is increasive, we'll call it speculative behavior on a couple stocks. One, if you're at all on Twitter or especially Reddit, you know what's going on with GameStop, ticker symbol GME. Basically, it's what's happening right now is your short squeeze. You have people who are looking up heavily shorted stocks, GameStop being the most heavily shorted stock by hedge funds, and intentionally driving the price of the stock up. And the underlying, I was joking with a buddy today, the GameStop fundamentals look solid. They don't. It's a terrible company. They lose about $450 million a year. There's a reason the smart guys on Wall Street were shorting it. But they're now getting eaten. Melvin Capital, a hedge fund that was it was about $1 billion short position in GameStop, had to close out their positions. Guys like Elon Musk were tweeting about it. You've got the CEO of Social Capital. His name's like Chadmith Palamahami. Doesn't matter. The point is, he gets in, says he bought some 150 calls. The Winklevoss twins were, seriously, talk about the crew of people that were commenting. You had Elon Musk and the Winklevoss twins. That's a crossover. Elon Musk and the Winklevoss twins walk into a bar. Just kidding. That usually never happens. But
no.
So, I'd be remiss if I just didn't mention that. Those stocks were up 100%. BlackBerry finishing up 35%. Nokia up 65%. GameStop currently trading about $300. Holy smokes, dude. Just unbelievable. Fun to watch, but we're definitely not taking part in any of this. So it'll be very interesting how this all shakes out. Because if there's one thing, but I will tell you this. And this is another thing I found interesting. Part of the sentiment, and they touched on this on CNB this morning, and I completely agree. Part of the sentiment behind why people like GameStop and AMC, why retail traders are dumping into it, is because there's this idea that the big man always wins. The guys on Wall Street have this edge that the little guy doesn't, and for once, the little guy has an edge that Wall Street doesn't. Melvin Capital can't get out of this position. The only thing they can do is cover it, and if it's going up, you just continue to cover at a loss. So that's where a lot of this sentiment is coming from it, and I think some of that is fair. I also think some of it is unfair. But here's what gets me, Stu. Nokia. So my buddy was talking to me about Nokia. Texted me. They halted Nokia shares. Nasdaq halted Nokia shares amid huge volatility. Now, it's within their right to do that, but that looks awfully much like the Nasdaq got some calls from some of their biggest prime brokers that says, yo, pull it, don't let it trade. So if there was already this sentiment that the big guy had an advantage, seeing the shutdowns that happened over trading is even more of an indication that there's a huge skew between Wall Street and Main Street. And that comes, and
Yep.
that doesn't just come in, everyday life. It comes in the investing world. And, so I don't know, Stu, if you want to comment on this before we move on. We have to. It's all, you can't, it's the most interesting thing that's happened in the marketplace over the past 3 days have been this GameStop stuff. What's your whole take on it?
The memes that have been going around are absolutely hilarious.
Wall Street Bets on Reddit. Holy smokes. I mean, I've followed that for a while. Never in my wildest dreams would I would have thought they would put a hedge fund out of a short position. Woo-hoo-hoo! It's kind of fun, honestly. Go, more power to them. They're talking about collusion. Sorry, I'll let you go, Stu. I've got so many thoughts on this. What do you think?
Oh, no. I love a good conspiracy theory, but in this case, I think it is actually true. You cannot make a stop like that without thinking somebody made a phone call from the C-suite. So,
Yeah, I think we could talk about this all day. All that is, it's going to be wildly interesting to see how some of this, maybe there's some new regulations that come. It's going to be very interesting. How it affects the energy markets, I don't know. So, it's probably the biggest we'll ever dive into a non-energy topic, but it just is absolutely fascinating to me. Moving over to the fun stuff, crude oil wasn't that good of a day. It was down about 1/10 of a percentage point, $52.54. Back into the curve was down 0.2 of a percentage point, down to 50.40. We'll walk through what happened in, kind of throughout the day with crude stocks. But crude stocks come in huge draw. Buoy's price is up, but then they fade overnight. Our high of the day was, if you look at our report, our high of the day was 53.40. We're currently trading about 70 cents lower. So it had a nice big bump from a huge crude draw, around 9.4 million barrels. We'll cover those numbers up here after Stu covers the international news desk. But we fade in the afternoon and pretty much finished flat. Natural gas, again, it's a weather trade, up 2.2 percentage points, currently trading about $2.71. Hey, maybe Elon Musk knows what he's talking about. What if he times this natural gas market just right that prices go to the moon? It would be absolutely hilarious. But again, it's a weather trade right now, so be wary of that. Back end of the curve, $2.93, only about 0.6 percentage point. Rare do I say energy equities lead the day. Now, they did lose about 0.7 of a percentage point, but was actually the least losing section along with utilities, which is wildly interesting because energy stocks are usually considered more risky than utilities. So grouping them together was interesting. Big movers on the bottom side. U.S. Energy Corp down 8.6 percentage points. Houston America Energy, go Texas. Not a great day, though, Stu. Down 10 percentage points. Sanchez Midstream's our favorite guys over there. They're down 11 percentage points. American Resources down 12.7 percentage points. And Telrinian Midstream, they're down 15 percentage points. Look at the upside, guys. Murphy Oil, they're up 10 percentage points. Southwestern up 11. Continental up 11. Peabody up 26. And PBF Energy up 33%. So there's still some upside to be made. There are some earnings that are going to be rolling out here. None today. We will cover Hess's earnings here in a little bit. But Stu, I want to bring you in. Internationally, there's a lot of stuff going on. There's some very interesting, you have a very interesting story about how pricing is really affecting what's going on.
Oh, yeah. Here we go. The first story is, it's kind of a fun one here. Oil rises with market structure pointing to tight global supply.
Yes.
I got another Saudi Aramco story coming up that fits right on into that one. But oil rise is just, you mentioned, tightening supplies around the world. A lot of it has already come off the ocean and floating storage. Yesterday, we ran the story that as it's coming off of the ocean with floating storage, they're going to start chopping up all these tankers. I think it was 18 million tankers, what they're worth for chopping. You and I got to get in that business.
Yep.
But here's where some of it's getting kind of funny. In the article, it says Saudi Arabia and Iraq are throttling back their supplies next month as OPEC coalitions to shore up prices. Now, here's the problem, Michael. They are still shipping out stuff through spoofing and doping. And I'm having arguments with folks on Twitter.
Hold you back.
Hold me back. They're out there saying we're going to see $100 a barrel coming up here pretty quick. I'm a little bit more skeptical than that one. I don't think we're going to see it because of the supply side. With a quote out of this nugget in this article was U.S. supply shrinking and OPEC still keeping a tight rein on the other part of the supply equation. The market is expected to be in a deficit despite the reduced demand from the resurgent virus. Nobody is taken into consideration Libya, Iran, Iraq, Turkey, all these other parts
I think the
are
real question on
dumping
your
oil.
analysis is this. I think this is what it comes down to this too. How much oil do you think is being leaked out from OPEC?
That's a good pun. But part of the problem is nobody actually knows. But as what I can gather, I'm going to put a number to paper on that. And I think that Libya is just coming back online. And so is Iraq. I think Iraq is 1 million barrels per day off on their accounting. I don't think they're accounting
Yeah,
these.
no, that's 1, 2, that's 2, 3% of global oil supply, or global oil supply. So you fall in the same camp as DRW. There's too much supply. These
Yes.
perma bulls have the fundamentals all wrong.
And they even said in so many articles they have no idea how much is being spoofed and how much is being doped because they're trying to get around all these things. And China is buying like you wouldn't believe.
Yeah,
Unbelievable how much
yeah,
is going over. You can look at the tanker records going over to China. It is amazing. So you
yeah.
can
No,
anyway. All right.
this is interesting. This is not the hill I'm going to die on. I died on the natural gas will not be 450 a hill. Not my hill I'm going to die on. This seems like
No,
it's your hill, Stu, and you know what? That means I'm about people with conviction. So I'm going to go along with you. What else you got on the international today?
hey, we got a fun one here. I'm a big India fan, and India plans $41 billion to reform and revive their ailing power utilities. We, the U.S., need to follow this, and I'll tell you why. India plans to spend 3 trillion rupees. I love just saying rupees; it's part of the gig here, or 41 billion in a new plan to revive regional electricity. I did not know this, but India has a very large problem with people stealing electricity.
Mm-hmm. How
And
do they
so they,
steal it?
uh,
It's
no,
fine.
that
It gets stolen somehow.
yes, no, they steal it because their infrastructure does not. They want to put in smart prepaid phones. They want to put in prepaid meters because there's no good accounting systems in these outlying areas. The other problem is they're putting in all these renewable solar, wind, all of these, and a grid that is designed for renewables is not the same as a grid that is an old standby grid. Our renewables and our Green New Deal and everything that's going on right now, our grid will not support it. Period. I will die on that one. So
Well,
we
and that's a good hill to die on because I'm with you. Now,
so I think India is getting on
but
the
we love
right track.
ourselves some Prime Minister Modi.
I'll give him a call. We'll get him on the show. Here's the other piece of the same puzzle here, and that's big oil's exploration cut. This goes into a couple of the other stories that we talked about. Big oil exploration cuts exacerbate, I always love that word, supply deficit. It could fit into Saudi Aramco's long-term plans. You and I've always been a big Saudi Aramco fan.
Yep.
I think their management is dead on. You have Exxon, you have all these other guys running this way going, ooh, green, and they're going this way. Saudi Aramco goes, we're also going to go green, but in the meantime, we're going to be 100% producing because y'all are going to go away. We're going to make all the profit.
Well, I
So
saw, is it Saudi Aramco going? I don't want to take your thunder because maybe this is what talks, but Saudi Aramco I saw was like yesterday. They're all in that. They're converting half their grid to natural gas.
exactly. So natural gas is smart, but they've just started crawling through all this. They're also just putting in some large solar and everything else. So they're doing both. They're doing a balanced power approach that we all need to adhere to. So Saudi Aramco is going to be sitting pretty because they're going to be drilling oil, they're going to be shipping oil, they're going to be doing renewables, They're going to be doing natural gas. So they are right on the money. Do it all. Have a balanced thing. So anyway, thanks for letting me rant. All those stories were all tied together on the greatest oil and gas website, which is Energy.
EnergyNewsBeat.com. You stole my thunder, Stu. I love it. Like he mentioned, you can check out all of those articles via that URL. When we move over to the energy side, a couple things. There's actually a mistake if you see the set. I forgot to add the fact that we need to cover what happened in crude oil inventories, because that's the biggest story right now before we get to Exxon's proxy fight, because that's the biggest story right now. 9 million barrel draw, bringing crude oil total inventories to 11 million, basically about 1,100, or basically, 111 million, 0.47. That's again a 9.9 million barrel draw. As I mentioned, prices were trading about 52.50 where they are now. Number drops, whoop, all the way up to about 53.40. Then whoop, down all the way down to where it's currently trading about 53.50. In homage to our Swami over at on ESPN, Chris Berman. Whoop, that will be our new phrase. So, like I said, bigger number than API, but what's interesting is traders cared, and then they didn't care. Algos bought it up, and then the fundamentals brought it back. This is why I don't believe $100 oil is going to happen, because if $100 oil was going to happen, this would be a catalyst for a move to 60 or a move to 55. No, it was a move up, and then we saw the sellers come back in and hit it really hard at that 53 level. So the charts will tell you where the levels are at, people. Just look. When all else fails, look at the charts. Domestic production drops 100,000 barrels, 10.9 million barrels on the U.S. production side. Refinery utilization drops a little less than a percentage point, down to 81.7. It was currently at 82.5 last week, so not great. We are seeing a huge drop in the East Coast, though. Everywhere saw an increase except the a moderate increase, except the East Coast pad, which is pad 1, saw a drop of about 4. So, as the virus goes, as this vaccine stuff goes, we will see these crude oil numbers go. Let's cover a couple things first. We got to cover the finance numbers first. Hess is our first oil field company to go ahead and drop earnings. They report a net loss of $97 million in its fourth quarter. The New York-based company said it had an adjusted loss of about 32 cents per share. On a non-recurring basis, they actually had it was a 58 cent per share. So they just had some write-downs here. They posted a revenue of about $1.4 billion, which beat Street's forecast about $1.5 billion. For the year, the company reported a net loss, which has widened to $3.09 billion, or about $10 a share. Revenue was reported about $4.8 billion for the whole year. Hair stocks are up about 8% on the year, but today, after the pounding it took, they're down about 2.4 percentage points. So the Street didn't come, even though they did knit a little bit. I mean, it's pretty hard when you lose $10 a share for the whole year. It's not going to look good regardless. But E&P stocks have been up. Next thing, this is just a classic. This next article is just a classic issue. BP gets pushback from Texas agency in its urge to ban gas filling. So this is funny, guys. Last year, British Petroleum called on Texas regulators to take bold action to stamp out routine flaring of natural gas, a harmful environmental practice that's drawn increasing scrutiny from investors and our favorite guy, DRW. He's not a fan of it. He came on the show last Friday, and he will be on the show this Friday, so tune in after our Friday show. And he talked about we have the capacity to put all of this natural gas in there. So the fact that we haven't been able to figure that out is a travesty. So get this, guys. On Tuesday, it was BP's turn to go before the Texas Railroad Commission and get 112 of its flaring requests reapproved. And guess what? The agency postponed the decision until its next meeting, and the newest member, Jim Wright, who's a Republican, slammed the burning of excess gas as a waste of our precious resources. Here's the quote, Stu. I am amendable to allowing fair time for flaring to occur in certain circumstances, but limits must be set. Oh, my goodness. Good. The 112 permits that BP were seeking for its shale assets would be good through April 2022 if granted. It just, don't bite the hand that feeds you. So my mom told me that when I was young.
Your mom was right, but.
Yeah, so any thoughts on this?
No, I am 100% in line with DRW. There is absolutely no reason that we could not have figured out a way to get rid of that flaring. Look, It is natural gas. You can run your rigs off it. There's ways of doing it. We are Americans. We can figure this stuff out, but nobody has. Oh, by the way, going back to Hess real quick, is 32 cent a wrapper out of Oklahoma?
No, it was after not under the new tax plans. It was 50 cent, but under the new tax plans, it's now 20 cent.
20 cent after. Yeah, he's a rapper in Oklahoma, though, right?
Oh,
okay.
I see. Okay, see.
Sorry.
I'm not really a good rapper. I remember that 50 cent quote that he said, I'll be 20 cent. Just cracks me up. One of the funniest things I've ever seen. But guys, we digress as always. Our final story on the show here before we let you go is Exxon Mobil. Remember, guys, they're having a proxy showdown with engine number one. They've formally nominated now 4 directors to the board of the energy giant, which is now facing calls to change its strategy. Here's the quote out of engine one. We believe that Exxon Mobil's board needs new members who have proven success positioning energy companies for today as well as tomorrow, and who are sufficiently independent from the current board to ensure a clean break from a strategy and a mindset that had led to years of value destruction and poorly positioned the company for the future. Engine one stated in a statement. Here's the 4 nominees right here. Gregory Joff, the former CEO of oil refiner Endeavor. Kasia Halita, an executive at Nestle Ojada, another refiner. Alexander Karjan, former U.S. Secretary of Energy, and Andres Rubidan, previously the CEO of Vesta Wind Systems AS. One, this is zero chance of happening, so these guys probably won't make the board. Not to just be too cut and dry. This won't happen. These guys own like 1% of the company. It is interesting though. If more companies pile on, aka Blackstone, who's the 3rd largest shareholder, who on Tuesday called for corporate leaders to disclose how their business plans will be compatible with a net zero economy by 2050. If someone like Blackstone decides to strictly go after Exxon, well, yeah, there'll be trouble in what we would call River City. That would be bad. But if it's just right now it's just a little engine that could. And I don't actually think it can unless it gets some help from BlackRock. It just needs Thomas the Tank Engine, just needs a little push up the hill, and then we'll be good. And trust me, BlackRock's a big push because they control. They're the 3rd largest shareholder. They have about $9 trillion in investment. It's unbelievable about what they do. This is also the first proxy fight for the San Francisco-based Engine One since it was launched by tech investor Chris James, and he launched the firm in December.
But the worldwide renewable market, 67 trillion. I mean, it's some ungodly number. And then you have BlackRock in control of 7 trillion of that, or 8 trillion. I can't remember, but it's a lot. So if you're a major, you're going after the bigger piece of the pie.
You are. And with that beautiful analysis, guys, we're going to get out of here, let you finish your day, get back to work. For Stuart Turley, I'm Michael Tam. Thank you for checking out on the Energy News Beat. We will see you tomorrow for another episode.
You bet.